All right, welcome to Looking at the Markets with David Moadel. Today is a very special day at Looking at the Markets because I have the honor and privilege of interviewing Mr. Chris Kimble. You know Chris from StockTwits, Twitter, and of course Kimble Charting Solutions. He's known far and wide for his charting mastery, and Mr. Kimble shares charts that are both informative and entertaining. Yes, it is possible. It's rare, but Mr. Kimble manages to do that. So we're gonna tap into Mr. Chris Kimble's charting insight and market wisdom. Mr. Chris Kimble, thank you for joining me today.
David, thank you. It's an honor to be here. Thank you for reaching out. It's really kind of you.
Well, the honor is all mine. Let's start, before we get into the heavy charting stuff that everybody is surely looking forward to seeing from you. What is your background in finance and trading? How did you get started?
David, back in the dark ages, around 1980, I got out of college and I opened up then what people called a financial planning practice. It was, more of a buzzword, David, than anything, at the time. And got started, and in some ways I was lucky, that the Dow then was at 1,000, but it had been at 1,000 14 or 15 years earlier than that. So, unbeknownst to me, was a great bull market ahead, and so it's kind of nice to start a business and get started at a lucky time in history. Luck is sometimes nice.
Oh, absolutely. They say it's better to be lucky than good, but perhaps you've been both at the same time. And since we're starting from the beginning, I'd like to ask about who are your mentors, and what is your favorite business book that you would like to share with us today?
Well, thanks for asking, David. I started, out in 1980, like I said, and was pretty much had been taught to my customers. We taught buy and hold, at the time, and I want to start off saying buy and hold is not broke. Every strategy, I believe, has its worthwhile endeavors, and each strategy has its weak points. And so I was lucky, David, as to after a few years in the business, I'm not a high risk taker, and I found a gentleman by the name of John Templeton, or he's Sir John Templeton, and even though our market, David, hadn't went anywhere for almost 15 years, it was flat. He'd found a way to average 15% per year from from the mid 60s to the early 80s, and that really impressed me. I turned a lot of my money of our customers over to his firm, and lo and behold, over time I was able to develop and learn, and he became my mentor. And so this is a gentleman, rest in peace, Sir John. He's passed away, David, but in many ways he still lives from the principles that he's shared, and he's set up multi-billion-dollar endowments. One of them, he gives away more money every year than the Nobel Peace Prize for the greatest progress in any religious education, or in religious education, excuse me. And so it's neat to see that his success in the business world is still working in a very positive way for society long after he's gone.
Absolutely. Yeah, that's great. So let's talk about what you do. The Kimble Charting Solutions. Everybody needs to check this out. And can you tell us how, first of all, what is Kimble Charting Solutions? What services do you offer? And how can people check out Kimble Charting Solutions and contact you?
Thank you, David. Hey, one thing that I failed to answer, you asked me about books and different things, and and so kind of going backwards, David, he was a very religious man, but what caught my attention one day, he said, there's a book out there that I've learned more from than any other book other than the Bible, and it really caught my attention, and so on the screen right now that we're looking at is that book that he suggested for me to get and read. And the book is called The Extraordinary Popular Delusions and the Madness of Crowds. And it's written by Charles Mackay. Now, the problem when he shared this idea, David, to go get this book, it was in the early early to mid 90s, and I live in Kansas. And when I came back, there was no Amazon, you know, David, at the time, and so I did an interlibrary loan search and found out that there was one copy of this book in the state of Kansas. And
Wow.
I was in front of a librarian at a university as I was doing this search for this book, and the librarian, I said, I'll go check it out, and the librarian shook her head no, because she said, well, Chris, you don't understand, this book's 150 years old, it's behind glass, it's at Wichita State University, it's probably worth $15,000 to $20,000, and they won't let you touch it. So I was fortunate to be able to give Sir John a call, and I think it was a test of his. In a laughing way, he said, well, Chris, I own my own publication company, and if you want a copy of the book, I'll get it for you. But one of my promises was to always, you know, suggest for people to read this book, David. It's one that has, it will create a really interesting footprint and understanding of markets that I would suggest for people to read. You can easily get it now, you know, on Amazon.com.
Right. I would say it's a must-read, and I think the word timeless comes to mind when it comes to certain books, and I believe this would fall under that category. Absolutely.
It really, well, the neat thing is, David, you know, so many people think of Sir John as a fundamentalist, and he was a great one, but one of the neatest things was he was really great at spotting big swings in emotional behavior, and I was, you know, I was humbled that he suggested this book, but I have to tell you, I was also disappointed when I found out about it, because in a way, in a poor attitudinal way, I thought, you know, this book couldn't be valuable because it's a couple hundred years old, and you know, we're better than this in the 90s, and we should know better. But it's not really true, because you know, after I told him I was kind of disappointed, he said, Chris, I think if we're alive 300 or 400 years from now, you know, people will still be buying and selling based upon fear and greed. He said, I just don't think you can extract that from human beings. And so
Yeah.
I'll get off the book at this time, David, but I think that's it's a great one to read, and the perspective it'll give you afterwards is priceless.
And I'm just going to read it out loud in case anyone is, you know, people sometimes watch this on their phone, and so the letters might be kind of small. The book is Extraordinary Popular Delusions and the Madness of Crowds. Sounds kind of like today. By Charles McKay, with a foreword by John Templeton, and looks like he actually, Mr. Templeton, signed this book for you back in 1996, which was very, very nice of him to do that, I would say.
Yes,
So
it's definitely priceless to me. There's no doubt.
and the information is priceless. A must-read for everybody. So let's go to modern times now. Let's go to the current madness of crowds. Kimble Charting Solutions. Look what you got up there. Which chart? Let's see. This is what I love about your chart so much. See, you got a photo.
This is from the book, David, and so for people that get to see this, there's two charts that have a similar look, and I like asking the question because one of them is from the 1700s and the other's from the 2000s. And so the chart on the right, we all, you know, we're familiar, David, with Isaac Newton as far as the father of gravity, but he really found out about something about financial gravity. This is the South Sea bubble of the shipping lanes in the 1700s, and he took the majority of his family fortune and bought at the top of this pattern and sold down here and lost about 90% of his money. But the chart on the left, is the Dow Jones Home Construction Index, and where the arrow is pointing is the 2006 high. And this is an example, David, that even though these two charts took place, what, 300 or 400 years apart, they look similar, and their commonality is they're traded still by human beings with emotions.
Yeah, some things never change. And human emotions. Yep, the madness of crowds. There it is. That's fantastic.
Just ask Sir Isaac, right?
Yep. Look at that. Oh, moving charts. Oh, my goodness. Wow. See, this is what makes Mr. Kimble's charting solutions so great. They're informative and entertaining at the same time. And I love the pictures you put up there, too, the guy scratching his head. That's what gets people's attention, whether it's on Twitter, StockTwits, or on your website. But then after you get their attention and keep their attention, you know, I have a master's degree in education. I've been a teacher for a long time. I know there's so much value. It's not a gimmick. It's a way of getting people's attention and helping them to remember what they're seeing. Wouldn't you agree with that?
I do, David, and I commend you for just what you brought up. You were mentioning books. Another one of my favorites, it's not necessarily a business book, but it's called Made to Stick. And again, it's Made to Stick by the Heath brothers. And what you've just mentioned, David, is so true. Is, it's about messaging and about stickiness. And I know I live in a chart jungle. This is my 37th year. I've never enjoyed it more. But I'll be the first to admit that a chart by itself has the potential to be quite boring. But it also has the potential to be dressed up and tell a story. And all I try to do is just let me help assist tell the story that billions of free-thinking people might be conveying with a chart pattern.
Right.
And that's what I find so fun.
Yeah, absolutely. Okay, so let's talk about your website and your services. If people want to contact you, if they want to check out what Kimble Charting Solutions has to offer, how can they do that?
David, they can, at the bottom of the screen, right now, I appreciate you, so much asking. We can be found at candlechartingsolutions.com, and Kimble's spelled K-I-M-B-L-E. That's, if it was spelled B-A-L-L, I would have been part of the lucky, sperm club, for the Oregon company, but I wasn't. So we can be found on our website and several other, social places, and I want to commend you, David, for what you're doing way beyond reaching out and touching base with us. It's you're doing a great service, and I appreciate what you
Absolutely.
do.
Yeah, and we can see at the bottom, again, some people are reading this, trying to read this on their phones, and so I'll say it out loud, and I'll also, of course, put it in the YouTube video description. The email for questions for Mr. Kimble, services at KimbleChartingSolutions.com, or call toll-free 877-721-7217. All right, let's look at some charts. Let's get to the nitty-gritty, shall we? What are you bullish on or bearish on in 2017? What are we looking at for this year?
Well, one of the things I'll scroll through quickly, and I'll get to a couple of charts in a second, but this is one, David, that we have fun with, that it's hard to believe that almost 2 months of the year have gone by. But we have a filter that we just call the seasonality strong stocks, and it's nothing more than just taking the S&P 500 and then asking a computer to look over the past decade, find stocks that are up 70% of the time or more, and then sort the stocks. And so I just, for your viewers, and because this will be out ahead of time, I just kind of wanted to show and give some people some S&P 500 stocks to go do some charts on their own and have some fun with. But the average or the median gain for the S&P in March over the last 10 years, David, has been a little bit over 2%. And you can see even at the bottom of the list, the second one from the bottom is Netflix, that it's averaged almost 6.7% per March over the last 10 years. So I just wanted to throw this out that sometimes we'll start with these type of filters just to look for opportunities of oversold or overbought. But kind of going back to something that I found interesting, and I appreciate you shared a chart on what some gold miners had done. But this, David, was we believe in starting long and smooth, and what we mean by long and smooth is to try to look at a long-term chart and to smooth it out if you can by going monthly. This is an example of a long and smooth weekly chart, and it's the S&P 500 divided by the gold bugs. And the gold bugs index is the symbol's HUI. And so at Christmas, it appeared to us that this might be forming a head and shoulders topping pattern or just a reversal pattern, and we believe in what we want to call is just a confluence or clusters, potentially, David, of support or resistance. And we felt like a potential cluster of resistance was taking place. So we don't know at this time. This was put out right at Christmas, December the 27th. 2 months later, this pattern is not proven, but what we do like that has happened is this is, as this is rising, this is the S&P stronger than gold bugs. So right here we felt like this could be a topping pattern, and so we went and bought the most aggressive miners trade that we could without leverage from an ETF perspective, which was GDXJ. And so this is an example of what we've had fun with this year. You were good enough, David, to share this chart. And it was just, I did nothing more, it's nothing fancy. You could see going at the lower right, we looked at from bonds to a few stock indices, what gold has done, and then what miners. And so, you know, the S&P today, I believe, closed at an all-time high, and it's doing well. But I kind of want to just remind people that behind the scenes, there's some things that are doing really well in the first couple of months of the year.
Absolutely. Yeah, again, the power of charting. You can see GDXJ just flying up there. You know, I don't know about everybody else, but I like to go with the trend. I don't believe in being a hero and trying to fight it. And I like your method of stock selection, and you automate it in a way. You let the computer do the legwork for you, and then you can select accordingly, and that's pretty cool. What are we looking at here?
David, one of the things, as all of the viewers know, is from a buy and hold perspective, metals have been a place that's not been, that's a strategy you wouldn't have wanted to use since the 2011 highs. But I just kind of want to share with your audience that the trend is down. This is the two ETFs, the silver versus gold ETF. So it's SLV/GLD ratio. And historically, when this ratio is going up, in other words, silver is stronger than gold, that, David, historically has been good for gold, silver, and miners. But you can see inside this channel number 1, for the last 7 years, this ratio has continued to set a series of lower highs and lower lows. But now at this number 2 here on the chart is that this ratio is undergoing another test of trying to get out of this pattern. And you know, we bought the GDXJ right down, you know, here on this low at Christmas, but this pattern is still in a downtrend. This is the 3rd time now in what, a year. It's knocking on the door, trying to see if it can bust through there. And so, one of the things that you just admitted in a way, Dave, you were a lot smarter than I am, because you like the trend, and I want to commend you for that, because that's where the most money can be made. We're silly. I guess I just fell off the hay wagon too many times or something, David, but we also attempt what we call TBNM. It's one of our strategies called tops, bottoms, and no middles. So we're looking for potential inflection points that could become high risk and reward, that the definition is really clear, that when you're wrong, you know exactly when you're wrong. But as an example with this, David, if this would break out to the upside, it would, favor that you'd have a trade of either long silver, short gold, or long silver, or long gold, or long miners. So this is just, these things have been beaten up. They've disappointed people year after year, and this is a disappointment price place that you should almost expect a disappointment, but it would be an aha moment, Dave, if it would break to the upside.
Yeah, I would love to see it break out of that channel. That is a trade waiting to happen. Very good, sir. So we can see anything else any other charts you'd like to show us about what you're bullish or bearish on for this year, 2017?
We'll try to wrap some things up, David, with this is be something that's unpopular, most likely a trade and stuff, but this is a chart of the Aussie dollar. And the reason I'm just showing this is the Aussie dollar is highly correlated with commodities. And, the popular narrative since, the election has been interest rates are going to go up, growth is going to go up, inflation is going to go up, and stocks are going to go up. And I'm not saying that narrative is not correct, but this is almost an asset to try to prove the narrative or disprove it. So as the Aussie dollar, because of Australia being heavy in commodities, you can see in this blue shaded area, this has created a series of lower highs and lower lows for years. And you can see up here at the top, with this series of lower highs and this red support line, once it broke, it started really falling. And, we see, your base material stock struggle, we see copper struggle, we see bond prices, go up. But if you almost look, David, this is almost a polar opposite pattern of what we saw at the top. And right. So if the Aussie dollar would break the falling channel and this series of lower highs, it's not about trading. We hardly ever trade the currencies themselves, David, but we kind of look at the currencies as the dog that wags the tail. In other words, if you can get the dog right, the tail that it can wag, the standard deviation off of different commodities plays, whether it's long or short, if you can get the dog right, being these commodities, I think that from a macro view can really help your investors with many of their short-term trades and just their portfolio construction. So even though this may not be real popular, you know, I suggest your audience to watch the Aussie dollar or FXA, that's the Aussie ETF,
Right.
to give you some good signs.
Absolutely. You say it might not be popular, but you know what? Making money is popular. Profiting is popular, and your charts are popular. If this, as you say, it's like the tail wagging the dog. If this can help me understand, you know, just as a global macro kind of thing, what's going to happen in the markets, it's something to watch for sure. All these are valuable. Yeah, absolutely. I'm just going to interject a real interesting question. The name of your service is Kimble Charting Solutions, but are you 100% all about charting, or do you also like to spend time examining the company or the sector's fundamentals?
We're not much into, there's nothing wrong with the fundamentals whatsoever. If you cut my arm, you're still going to bleed macro fundamentals, David. You know, so, you know, as an example, a popular chart would be that the margin debt is something that is at record highs right now, and it was similar in 2000 and 2007, but like a misnomer I think there is that margin debt being high by itself is not a bad thing, but when margin debt's at all-time highs and it starts turning down, in other words, people start withdrawing, you know, margin from the marketplace, you know, that's almost a fundamental macro piece, you know, that I think people, you know, should watch. I love sentiment. You know, this past summer in July, bonds had been doing well, and I think it was like 90% of people were bullish bonds at that time, and so we bought TBF and shorted it. And so now, whether, even though I've been in the business 37 years, didn't matter how long that any of us, if you'd been in the business the same amount of time, David, I'd say, wow, friend, how many times have you seen bond bulls at like 0%? And so that's going on, you know, right now from a sentiment perspective, and part of the narrative is inflation's here, interest rates, you know, are going to rise. So you know, those are things that we do pay attention to. I mean, there's just no doubt that we do, and but their price is still, you know, one of the things I appreciate you bringing up our company name that I like kidding about is that I didn't name our company Kimble Charting Problems. You know, so much of the stuff out there is about problems, and I'm just want to try to stay above half empty, stay solutionary. I think these are, I'm so envious of like your youth and the tools and the opportunities that are out here. I can't imagine, you know, where things will be when you're my age, and how much fun and how much money that you and your readers will have. I mean, this is exciting times ahead for many.
Absolutely, that's great. Wanted to talk about, so there's something you brought up, that you said that there was a point when 9 out of 10 people, 90%, were bullish on bonds, and so of course you're going to short it. That's now that may be an of course to you, but it's not an of course to most people. Do you consider yourself a staunch contrarian at heart?
Oh, you know, I think all of us like to say that we are some, you know, David, and I do like to look at the opposite things. I was reading or listening to an audio book called no, I think, I don't know if it was The Big Magic, or another book I'd recommend is Tools of the Titans by Tim Ferriss. There's just such a wealth of stuff in there. But one of the books I was reading, I apologize, it talked about if you're a contrarian, you think you know a secret. Because it's really true. I mean, there was a few times I brought up to Sir John, you know, I was concerned about this, or this, and he didn't laugh at me, but I bet inside he probably was. You know, he said, you know, Chris, do you know anything the world doesn't know? You know, I have to humbly say, no, that's not true. And he said, well, I wouldn't worry about what you and the world knows. I'd worry about what the world doesn't know is out there at this time that it could impact the markets. And so my problem, David, that was always a big stretch, to try to know the secret of the world and what they don't know that's going to impact things. And so that's why I really love the chart patterns is we all leave as a collective group trails in the sand. And these trails have commonality of the way patterns look. That's why I showed you that quiz, to start off this call. And so I feel really comfortable. I think, someday the 20 trillion in debt could come home, the chicken could come home to roost. I humbly believe this is the largest financial experiment in world times, but I don't know how it's going to turn out. And I humbly don't know anybody that knows exactly how it'll turn out, but I do feel confident that patterns will persist and monies will flow and opportunities will be present for years and years to come.
Absolutely. So can you tell me an example of a trade that you made in which the chart helped you to make the right trading decision?
Oh, sure. We could even go back. I don't know if we've got it right here on the bond that we were just talking about, earlier.
Right.
This would be, it. Here was how we built the chart. I believe in trying to, if we want to find a resistance as an example, David, you start with support. So, the 4 stages of a bull market, they're born on, bull markets are born on pessimism. So let's think about what's the bottom of this chart. So we want to try to find what we want to call emotive points, which are emotional. I don't care the reason because I'm not into reasons. I'm just into price movements. So all we're doing is starting from the bottom, David. We're taking the support point, then I'm going to create a parallel line. So this top line is nothing more, David, than the bottom line. It's a parallel. We'll place it on the tops. And so then we're saying, well, whatever this asset is, again, this doesn't matter what asset this is all about chart patterns and emotions. So there was a potential resistance point right here. So then we found there's another potential resistance point. So then we also looked at, you asked, earlier, relative momentum is important. So we can see whatever this asset is looking back a decade, momentum is fairly high. Could we apply Fibonacci? So we take the high and the low and we apply a 61% increase on that distance and look where it comes into play. Here's another resistance point. And so now you have 90% bulls right here at this price point, and this is the asset we talked about earlier. This is TLT last summer. And you can see that TLT experienced one of its sharpest 4-month declines in the history of TLT. So this is an example of a combination, David, of where the chart pattern is our driving force, but we also looked at repetitiveness from the Fibonacci extension level. We also looked at sentiment, and we looked at momentum, and it was a combination of those. But the deciding factor was up here, David, that, okay, we will short this, but the nice part was if it would just break a couple of percent above that, it didn't matter how compelling this case would have been. If it kept going up, we would have exited the trade.
Yeah, that's a perfect example. That channel there, those parallel lines, the trade worked out perfectly. But yeah, I like the way you confirmed it with the relative momentum index. And of course, I love your pictures that you added in there as well. That is so cool. Yeah, very good. So I wanted to ask you about retail traders. Most retail traders lose money over time. Most of them experience failure over the long term. How can people use charts to increase their chances of succeeding?
Dave, it's a great question, and I think the best thing is from a risk management perspective. I've kidded my financial planning customers for years. I always would say, you've heard of the San Diego chicken in baseball, and as I'm looking at my friends and customers, I said, you're looking at the Kansas chicken. I am not an aggressive person. This is all about risk management. We're looking for solutions, and one of those solutions is risk management. We are anything flawless at what we do, A third of the time, I can't seem to get around it, David. We're wrong about what we do. The thing I just can sleep okay with, at night is I wish it was 100%, but it just doesn't work that way. But the thing I know is if we're wrong, we're just not going to be wrong for very long. And so then we don't have a lot of ground to make up. And I think that's important for retail traders, is to have some, because like fundamentals is as great as they are. I mean, one of the things I didn't share, earlier, David, is with Sir John in the late 90s. He scared the bejeebers out of me, when he said, Chris, for several different reasons, and this is in the roaring 90s, he said, I think that the market at best will be flat 15 years from now. So as I came back, back home from leaving there, I was really almost depressed, because, what do you do when one of the greatest investors of all time says, from a baseball perspective, David, your swing's broke. What do you do? And so I thought, what do you do if he's right, and what do you do if he's wrong? And so I didn't want to experiment with my customers' monies from a retail, or a personal perspective. And so, as you know, I had nothing to do with the invention of moving averages, but even in the late 90s, I could test them for 100 years going back. And so moving averages are beautiful on trends, but what is their challenge point? It's a turning point. At the top, you leave some on the table, and at the bottom, it has to go by. You leave something on the table. So, for retail investors, I'd never lose sight of moving averages, but I'd know their weak points. And then what we try to do, David, is at those weak points of a moving average, we try to make them a strong point. And the chart that we're looking at from this TLT, that's where we're trying to look for reversals, that you can know where your loss is, and that loss based upon a chart pattern. But then if you're right, you can have a real nice reward from it.
Yeah, that's great. Yeah, I really like the way that it's like there's a continuum of knowledge and wisdom, going through Sir John Templeton, and it feels like you're carrying on the tradition of his knowledge and his wisdom, and you're passing it on to people like me and my listeners and yours as well, and your viewers. I think that's really great. Just one last question, if I may, and then of course you can show as many charts as you'd like. What would Sir John Templeton think, and what do you think of just day after day after day of all-time highs in the markets?
Well, that's a beautiful question, and I ask that quite often. If John was alive, what would he be thinking today? And boy, would I like to know some of those answers, David. It's because it's so fascinating. I think one of the things that he was alerted to in the late 90s that he shared with me was the percentage of financial assets of the average investor in America, and the percentage of financial assets divided by their income. Types of things like that on top of valuations, that I think he would say that current valuations do not mean that the current trend has to stop. But I know he would go on to say, but there's not been a lot of long-lasting bull markets get started from current levels either.
Yeah. Okay. So although I don't remember who said this, but maybe the market can remain irrational longer than we can remain solvent. Although that's true, and that's one of my favorite quotes. Although that's true, I don't know if this is a bubble we're in, but it's feeling a little cloudy up in these levels, and so it's I think Sir John Templeton's words ring true, even all these years later. Very true. Do you have any other charts you'd like to show us today before we go over your contact information one more time?
David, I probably bored you and your audience enough already, so I'll call it quits.
You certainly have not. There's nothing boring about you or your charts, which are both informative, entertaining, and accessible. That's another word I'd like to add to that mix. Beginners and, from novices to expert, so-called experts out there, everyone can benefit from these types of charts. And are you, Yeah, yeah, and now if somebody is to tap into Kimble Charting Solutions, is it something where you would teach them, you would guide them through the charting process themselves, or you would show them your charts and explain them? How does that work?
Dave, we try to do cover a couple of angles. You know, we do make clear suggestions, what we call taking action ideas to our customers, that when we think something should be done, they get a message from that. But I also, you know, I know someday I'm not going to be able to fog a mirror anymore, and I would love nothing more than, you know, years from now somebody said, hey, I listened to that old goofball years ago, and I picked up a couple of things, you know, from him. So, you know, we publish some of our work weekly. We also publish some of our work daily, and so it just kind of depends on what people are looking for. But we do try to, just like I did with this chart on TLT, we try to show people how to construct these things. I find it fascinating. I don't have the world's technical analysis cornered by any stretch, and it's part of the fun of doing this is just what we're doing today, is meeting very good people that care like you do, David, and I'm really appreciative of it.
Well, thank you for saying that, and right back at you. Let's go over that contact information one more time. You know I'm not going to let you go till we do this. KimbleChartingSolutions.com, is that the right web address? And how else can people contact you?
Yes, and you know, like you had shared earlier, and thank you, you know, David, is you can get a hold of us at services@KimbleChartingSolutions.com, or give us a call at 877-721-7217, and we'll try to share some fun ideas with you, I hope.
I think Rick was trying to message me. Is there a free blog of some sort that's going on as well there?
I'm not sure what he might have been referring to. I mean, we do have a, you know, our blog is free, yes. I mean, by going to the website, then you can pick up the blog, and we do post, as you know, David, almost each day that people can pick up, you know, ideas and stuff. So.
And if people are not checking you out on StockTwits by now and on Twitter, why aren't they? See, they need to. Absolutely. It's you know, why not tap into this freely available knowledge, which I think is fantastic. Mr. Chris Kimble, it has been an honor and a pleasure. We are taking the knowledge and wisdom of the ages, and we're bringing them into the modern world, and I really appreciate it. Mr. Kimble, thank you so much for joining me today.
Thank you, David, for all you do. Very much appreciate it. Have a good day, everyone.
All right, you too.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.